Eric Trump jumped on an earnings call earlier this year with a simple message: American Bitcoin is winning. He thanked his team by name. He talked about becoming a leader in the Bitcoin world. He spoke like a man at the helm of something historic. What he didn't mention, the company had just reported a $59 million loss. It had 2 full-time employees, and the everyday investors who bought into his pitch were down an estimated $500 million. Eric Trump's personal net worth, meanwhile, had grown by roughly $90 million. This is the story of how American Bitcoin turned the Trump name into a financial instrument and who ended up paying for it. The setup: a name in search of a business. The company that became American Bitcoin was incorporated in Delaware in November 2024, just 2 weeks after Donald Trump won the presidential election. It didn't start as a crypto play. The original plan was data centers. A Dubai-based developer who had partnered with the Trumps on a golf project flew into Mar-a-Lago and announced a $20 billion investment in American data centers to capitalize on the AI boom. Within weeks, the Trump sons had their own version, a company called American Data Centers. Then the plan changed. Through mutual connections, Eric and Don Jr. were introduced to 2 entrepreneurs, Asher Ganut and Mike Ho, who were already running a Bitcoin mining and data center company called Hut 8. Ganut and Ho had a problem. Bitcoin mining had just gotten a lot harder after the halving, which cut the reward for mining each coin in half. Institutional shareholders were pushing them to pivot to AI instead. But Ganut and Ho had a different idea: offer the Trump brothers a 20% stake in the mining hardware. Get the most famous brand in America attached to the venture. Then spin the whole thing into a publicly traded company and let the hype do the rest. American Bitcoin was born. The pitch: a money-printing machine. The sales pitch was elegant and, on the surface, compelling. American Bitcoin claimed it could mine Bitcoin at a cost of around $52,000 per coin. At the time, Bitcoin was trading near $75,000. That's a $23,000 margin on every single coin they mined. As Eric Trump put it, a money-printing machine. There was just one problem with those numbers. The $52,000 figure only counted direct operating costs, electricity, and keeping the machines running. It left out debt financing, corporate overhead, equipment depreciation, and the cost of the capital used to buy the hardware in the first place. Once analysts factored in the full picture, the real all-in cost per coin was closer to $100,000, which meant that at $75,000 Bitcoin, American Bitcoin wasn't making $23,000 per coin, it was losing $25,000 per coin. The money-printing machine was running in reverse. The listing: $13 billion for a 2-person company. On September 3, 2025, American Bitcoin debuted on the NASDAQ under the ticker ABTC. Eric Trump called it a historic milestone, bringing Bitcoin into the core of U.S. capital markets. The market agreed, at least initially. Investors valued the company at $13.2 billion, despite the fact that its annual report, filed 1 month later, confirmed it had just 2 full-time employees: the CEO and the president. A woman who had worked in investor relations at a different company for less than a year listed herself as chief of staff on LinkedIn. Someone else joined as social media manager in January. The board had 5 members. The executive chairman was Ganut. 3 were listed as independent directors. Eric Trump held his stake and his title as co-founder, while remaining exempt from New York's ban on him serving as a corporate officer because the company was incorporated in Delaware and headquartered in Florida. Over the following months, as the stock traded at inflated valuations fueled by Trump brand enthusiasm, the company did exactly what the structure was designed to do. It issued new shares to raise cash, used that cash to buy more Bitcoin, and watched the dilution quietly erode the value of every existing shareholder's stake. The collapse: down 92%, losses mounting. By early 2026, the stock had fallen 92% from its peak. Shares that had traded above $9 were sitting around $1.25. The fourth quarter of 2025 brought a net loss of $59.5 million, a swing from a $3.5 million profit the year before. The first quarter of 2026 was worse, a net loss of $81.8 million, with revenue of just $62 million against operating expenses of $150 million. The single largest driver was a $117 million write-down on the value of its Bitcoin holdings, as the cryptocurrency fell 22% during the quarter. The CEO, Mike Ho, insisted the core mining business remained profitable if you stripped out the accounting adjustments tied to Bitcoin's price movements. That's technically true on a gross margin basis. The cost to mine one coin had actually fallen to around $36,000, well below market price. But a business that holds enormous quantities of a volatile asset and finances its operations with debt is always going to be exposed when prices drop. That's not an accounting quirk, it's the model. Retail investors who had bought in at the peak, attracted by the Trump name and the money-printing narrative, are estimated to have lost around $500 million in combined market value. The Forbes investigation that first reported the figures described the company not as a Bitcoin miner but as an arbitrage machine. Issue shares at valuations inflated by celebrity branding, use the proceeds to buy Bitcoin, let dilution eat the upside that was promised to buyers. The company's response was to call the Forbes story Chinese propaganda and a politically motivated hit job. The scorecard: who actually won? Here is what the numbers actually show. Eric Trump invested little to nothing to get involved with the venture. His personal net worth grew from an estimated $190 million to $280 million during the period when the stock was collapsing for everyone else. The mechanism was straightforward. He held an equity stake established before the public listing at a cost basis far below what retail investors paid on the open market. Ganut and Ho, who engineered the structure and brought the Trumps in, also came out ahead. The insiders got in early, the public got in late. As of early May 2026, American Bitcoin holds over 7,300 Bitcoin, making it one of the largest publicly traded Bitcoin treasury companies in the world. The stock trades around $1.25. The company has now lost money for 2 consecutive quarters. It's never paid a dividend. Its fate is entirely tied to the price of an asset it cannot control. Whether American Bitcoin survives long-term depends almost entirely on whether Bitcoin goes back up and stays there. That's not a business, that's a bet. The Trump family learned long ago that there is money to be made in making things look bigger than they are. American Bitcoin is a masterclass in that tradition. It launched with 2 employees and a $13 billion valuation. It produced 2 consecutive quarterly losses totaling over $140 million. And through all of it, the man whose name is on the door came out $90 million richer. Retail investors, by contrast, are down $500 million. What do you think? Is this a legitimate business that hit bad market timing? Or something closer to a hype machine that was never built to benefit ordinary investors? Let us know in the comments. And subscribe for more stories like this one.